Hello everyone, welcome to another trade recap and forecast. So this is our classic Wednesday trade recap, starting with the euro and the US dollar. Let's see what we can spot on this currency pair. So what was happening in the price action? Well, basically this was an area of interest to me. I did have a buy limit set right here, because I saw a nice clean descending channel and I saw a nice strong momentum to the upside. So this was a perfect reversal opportunity. Unfortunately, it just could not tag me in, so it went up without me. Okay, never tagged my initial entry level. At this point I did have my order on as well for a buy limit, but it never came to my level, so it just went on flying without me, unfortunately. Yes, there was a flag right here as well, which you could have taken. It was an interesting flag. First high, first low, second high, second low, but for me, double wicks and a bit of a shift. I saw some selling pressure right here, so I was not really interested in this flag formation. So in the end, I did not take any entries in this area, okay? I was expecting the price to go up, I definitely was. But again, I had some buy limit orders on, I just could not get tagged into that position and the flag did not fit the plan. Then the price continued up and then it just kind of ranged around right here, okay? And then it was Friday. On Sunday, the market opened. Went up a little bit, but no buy setups for me. I was looking for a potential buy setup right here, but I wanted a clean close on the top. I wanted to see something like this. That just could not happen, okay? Instead, price printed a wick, retraced. And then we went down a little bit. I was looking for a sell setup right here, but a sell setup did not form, or at least a high probability sell setup did not form. So didn't take that anything there either. And now I am in a trade. I am in a buy setup. It's a liquidity sweep trade. Okay, so what was I seeing? Basically, I was seeing a couple of confluences for the liquidity sweep. I was seeing the shift in momentum liquidity. So this large bullish candle here, this one as well. There's going to be some buying happening in those candles. Okay, and people are most likely going to put their stops below this low here as well. And then we have a nice range, so that creates liquidity as well. And then we have a nice takeout of that liquidity. Large wick goes into the liquidity area, rejects. We have a nice bullish candle. That is where I execute. And yeah, I'm not gonna talk about the exact take profit level and the exact stop loss level because that is all reserved for the Zentum traders. But I just wanted to mention it here on this trade recap that yes, I have spotted this nice high probability liquidity sweep setup, and I am currently waiting to see what will happen. Either it will hit the stop loss or it will hit the take profit. I do not use the trailing stop loss management for the liquidity sweep. I only use that for the trending entries. So basically I aim for a fixed target for this sort of an entry. I have found that works a bit better, okay? Through our backtesting, we have found it works a bit better. So yes, I am going to put this pair on the watch list because I am going to be monitoring what is happening with my trade. And then we can move on to the next pair, which is going to be the euro and the Japanese yen. So for this currency pair, let's see, last Wednesday, we were pretty flat, corrective and range bound. We did have a nice drop right here of momentum, but again, after that, we got a big shift to the upside, so that made me be more patient. I didn't take any trades. Then we ranged around, broke the high. This momentum could not be sustained, okay? So I was seeing some nice bullish pressure right here, but this break was not enough. I wanted to see a bigger, stronger break with a nice clean close. That would have definitely fit my plan, but this was just a break and a retrace. So we got that covered, and then price just continued to be more corrective and range bound throughout this area. We had a big drop, some big bearish momentum, which we can see right here, but again, no follow through. That's kind of the story from the last couple of weeks, or even last couple of weeks. We have some moves, but we just do not get any follow through, right? We had this move right here, aggressive retrace. We had this move, breaks the high retraces. We have this large selling pressure, and then look at what happens. Basically, we break the low, print a large wick, retrace. So being more patient with this pair, I was looking for a buy setup right here because I saw some nice buying pressure. Right here, we got a 1 candle pullback. It was an inside bar, so I had a buy limit order set with a 12 pip stop loss. And then what happened? Price moved away to the upside. It never tagged my initial position, but it definitely was interested for a buy setup. This to me looked clean. It looked nice. This momentum was nice. The pullback was clean. No shift in the pullback. Price continues. Nice close right here. So yeah, it definitely fit the plan. And then the momentum again got a major shift. So at this point, I was still looking for some buy setups, maybe a flag, maybe a continuation, but look what happened. Basically, large selling pressure in this candle and in this candle as well. Broke the high, retraced. So yeah, this no longer looks good. It looks flat, corrective, range bound. I'm expecting more of a range in this area like this. And I'm looking for a large push up or a large impulse to the downside like this. So that is about it for the euro and the Japanese yen. Being more patient on this currency pair. So let's move on to the Aussie and the US dollar. So what has been happening on this currency pair? It is my favorite to trade, where we get a lot of setups on this pair, and we also trade the liquidity sweep as well. So from last Wednesday, which was around here, we got a descending structure. I was definitely interested in some buy setups because the descending structure looked really nice. I wanted to see a clean close though. I wanted to see something like this. Nice big candle, clean close on the top. It never happened. Instead, we left a wick and then we continued. But at this point, the price was too far away. I would have taken a flag, which never formed either. So yes, I did like the price action. We had 1, 2, 3, 4, 5 consecutive breaks of the low. That was looking really high probability, but we never got a high probability entry here. Okay, then price did print a flag a bit higher. This was the flag, but didn't fit the plan. Large wick on the top, selling pressure in the flag. It was a bigger flag as well. On the Aussie US dollar, I especially like the smaller and the tighter flags like this. This one was kind of too big, so the large wick and the big flag just did not fit my personal trade plan. Then the price continued up, so the flag I believe would have been a winner. Let's see with my 10 pip stop loss, how would it have played out? Yeah, it would be a nice winning setup, but again, it just did not fit the plan. Price went up, retraced, major selling pressure right here, and then I did get in a liquidity sweep trade. Okay, so let's analyze it. It was right here. So Monday the 3rd of June at 5 p.m. What did I like about this trade? Well, I liked a couple of the confluences. I liked first the shift in momentum liquidity. So major selling pressure here, major selling pressure here. Where will the sellers put their stop losses? Probably above this high. Next thing, major high takeout, which is this one, and also a takeout of this major high as well. So so two highs got taken out, and another confluence was the nice range right here. Not the biggest, but definitely price was ranging around between the most recent low and the most recent high. Price goes into the liquidity, prints a absolutely huge wick, rejecting that area. Nice bearish entry. That's where I get in. And basically it did end up being a loss, but I am risking 0.5% on the liquidity sweeps since I am still researching them, still kind of implementing them live. So I am gradually increasing my risk size. I started with 0.25, now I'm at 0.5, and then I'm going to go 0.75 all the way to the maximum of 1% per every single trade. So that's the game plan for the liquidity sweep. Yeah, this was unfortunately a loss, but it was still very high probability. I think it was an absolute no-brainer this major high takeout and this major high takeout was the selling point for this trade. They were really, really good confluences, and the range was nice as well. And of course, the shift in momentum liquidity. Price starts ascending right here. Definitely starts forming and ascending. And then we get actually 1, 2, 3, 4, 5 consecutive breaks of the high. So that was nice, that was clean, but not enough for me to look for a reversal setup. I believe some traders did take or were interested in taking this reversal scenario. Could have placed a sell limit like this. For me, I wanted a cleaner ascending. So for me, this ascending was not tight enough. I wanted to see something like this form, okay? A nice tight ascending, the highs barely getting taken out. Here I saw too much buying pressure in this leg, too much buying pressure in this leg as well, kind of. So maybe if this break was like really big, I would be looking for a flag, but on a Tuesday, again, Mondays and Tuesdays are predominantly range-bound days, so I tend to be very careful at the beginning of the week. And yeah, the ascending was not that well defined for me personally. It was not tight enough, and the break was okay, but it was Tuesday, so I did stay out of this setup. If I got in, it would be a nice winner, I believe. Yeah, basically you would have a sell limit here, you would get tagged in, price would drop, and then you would keep following the trade with the trade management rule, and your stop loss would currently be 2 pips above this most recent high, so you would still be in this setup. But I did take a trade in the end. Let's first comment on this flag, because I know some traders did take this flag. What they saw was the ascending channel. Then they saw major selling pressure in this leg. So yeah, prior price action was nice, especially when we got the confirmation, when we got the signature of this major bearish leg. And then we have the flag. Now for me, the flag did not fit my personal plan. What didn't I like about it? Well, the double wicks on the bottom, and then it was kind of a bigger flag. Okay, it was kind of a bigger flag. I wanted to see a bit of a smaller and a tighter flag. This to me just did not fit the plan. Okay, it was kind of borderline, and it was Tuesday, so the warning signs were double wicks, which I know are a major warning sign on the Aussie US dollar. When I see double wicks, I tend to be very, very patient on the Aussie US dollar. So double wicks, bigger flag, okay, kind of a larger, not really big, but it was not tight like this. And then it was Tuesday as well, so I did decide not to risk the 1%. I did decide to stay out of this flag formation, and it would have been a loss with my 10 pip stop loss, I believe. Let me check it out. Yeah, so it would be a loss, and good that I did follow my plan. But then I did take a liquidity sweep entry, so looks like the market is producing a lot of liquidity sweeps lately, which does make sense because the market does look flat and range bound on almost every single pair. So on almost all of my 6 currency pairs, the price does look pretty flat and corrective. But I did like this sweep. What were the confluences? There were a lot of confluences. First one is gonna be a takeout of multiple lows. So this low, and this low. At least 3 major lows got taken out with this sweep. Then you have a bit of buying pressure here as well. So all of the buyers that bought in this candle, they most likely put their stop loss below this low, creating liquidity. And you have a range, which is nice. So the range was pretty nice as well. It was a wider range, kind of not that big, but definitely defined. And then the price goes into the lower liquidity. Retraces, heavily rejects that liquidity area. Let's highlight it. Heavily rejects it. So I enter on this candle right here. And basically, yeah, I'm not going to go into it too much, but this is a very, very high probability setup in my book. I have my fixed stop loss. I have my fixed take profit in place. Now it's just a waiting game. Okay, either I will get taken out for a loss or I'll get taken out for a win. But I'm risking 0.5% on this trade as well. So I'm risking 0.5% on every single one of the liquidity sweep trades. Currently running some profit, looks like it. So we will see what will happen. But I definitely like this price action. Again, 3 major confluences. 3. the major low takeout, the shift in momentum here, attracting a lot of buyers, and the nice range as well. So 3 major ones, and the price action just looked very conducive as well. I am gonna put this on the watch list because again, I'm in a trade, so I am gonna keep an eye on this position. That's about it for the US dollar. So I'm just gonna wait. Either I'll get taken out or I'll get I'll get taken out for a loss or for a win. And then once I get taken out, I will reevaluate the price. Moving on to the Aussie and the Japanese yen. For AJ, from last Wednesday, price was just not that good. There was an internal reversal opportunity that I missed, to be honest. So I did heavily look at this for the Zentum trade recap, which comes out every Saturday or Sunday. This was nice, okay? This was a clean internal reversal entry. I'm not gonna go into it too much, but basically there was a nice descending channel. There was the fake out after the descending channel and a nice shift in momentum. So you could have entered here and then use a fixed stop loss and a fixed take profit. It would be a nice winning setup for me. Completely missed because I was preparing for a trip. Okay, so on Friday I was flying. On Thursday I need to get everything ready and I was just all over the place. I did not check the charts thoroughly as I should have. So this was definitely kind of a missed trade for me. And then what happened next? Well, the price was pretty flat after that. It would reach a take profit of the internal reversal entry, which is a new entry at the Zentum Trading. Not new, but kind of just 4 or 5 months old, right? We launched it with the launch of Zentum Trading. Price would have hit the take profit. Then we were flat, and then we had a big drop right here. Some major selling pressure in this leg, okay? But it could not be sustained. Unfortunately, it just could not be sustained. So what happened? We got some major buying pressure after that, and now I'm just expecting a range. I'm being more patient. Definitely not gonna put this pair on the watch list. And I am waiting for the break of the most recent high level or the most recent low level. Okay, just waiting for something like this to happen. Or for something like this to happen as well. So that's about it for AJ. Being more patient. Pound US dollar, I don't believe we had anything interesting. Okay, yeah, we did. Same story as the euro and the US dollar. So at the same time that the euro US dollar was setting up, this pair was also producing an interesting setup as well. We had a clean descending and we had a clean momentum to the upside. Very nice large blue candle, but we do not trade reversals on the pound US dollar. We have found they do not have a good profit expectancy, so we were just more patient. If someone took this, I believe it would be a nice winning setup. Yeah, it would. Oh no, actually it would get taken out for a small winner here if you used our trade management rule. But there were a couple of other opportunities. You could have looked for a break and retest setup to buy at this point, but for me, saw the slowdown, saw price breaking, leaving wicks. This break was not enough. Then price continues up, but prints a wick. The break is still not significant enough, and then it does form a flag as well. Right here, this would have been the entry for the flag, but to be honest, I was looking for a range, okay? Because of the double wicks. The double wicks were a big warning sign to me. I wanted to see a nice, clean, wide range in the flag, which never happened. So I did stay out of this flag, and then the price dropped a little bit. And then let's see, exit the replay. Price was flat and range bound right here. Then it did continue to the upside. But again, here no setups formed either. So this break was okay. For the pound, I can tolerate a smaller break, but I did not like this shift in momentum right here, okay? So this large selling pressure candle was a big warning sign to me. Because of that, I wanted to see price continue with a lot more momentum to the upside like this. Which kind of did happen, okay? I would have taken an entry at this point, but it never formed. Maybe a flag, I'm not sure, because this is a major warning sign, especially on a Monday, especially early in the week. But I was definitely looking for a break and retest. We got a one candle pullback, no shift, and I was looking for a push up and a nice clean close, which unfortunately never happened. So for the pound, no trades. Basically, price broke the high, retraced, as you can see. It did drop, possibly looking for sell setups, but then what happened? Got a major buying pressure, got some major buying pressure. So now being a lot more patient, definitely not putting the pound US dollar on the watch list. I'm not trading the liquidity sweep on this currency pair. So I'm just waiting. I'm only trading the trending entries. So I'm just waiting for the break of the most recent high or the most recent low. Simply looking for a large impulse up or a large impulse down like this. And that's it for the pound and the US dollar. Finally, we reach our final pair on the list, which is the New Zealand and the Japanese yen. It has had some activity. Let's find last Wednesday. Right here, that was the time of the recap. Again, as on all of the JPY pairs, I was looking for a sell setup at this point, but it just could not happen because the price started printing some large buying pressure, as you can see right here. Then the price continued up. We did have a interesting opportunity right here for a potential reversal setup. At this point, the break was kind of borderline, and it was Monday, so I wanted to be a bit more patient. We had the ascending. We had the break, but I wanted a bit of a bigger break, and it happened. Look, right here, it did happen with a nice clean close on the bottom, but we never got the high probability entry. Instead, price started slowing down, showed a big bullish candle, major warning sign, and then I was just a lot more patient. After this candle, I didn't want to take any setups. That is a major warning sign. My entry for a break and retest would have been right here on this level, on this minor low, okay? Because the price did this kind of minor low, broke down. So I would be aiming for this minor low level for a break and retest. But when we printed this candle, that definitely negated all of the setups for me. Broke the high, retraced, broke the low, major selling momentum, but we never got a high probability entry to sell. Okay, we just got a major drop, major selling, major selling pressure, and then major buying pressure right after that, as you can see in this candle and in these candles as well. So this pair is definitely not on the watch list. It's looking more corrective. It's looking more flat and range bound. This possibly may be a V reversal like this, and then a range, and then we get a push up possibly, but it's not really clean. It's not looking that clean. Again, when I'm looking for a clean V reversal, I want to see quick momentum down like this, and then I want to see quick momentum up in a similar sort of manner like this. Okay, that is what I want to see. And right here I'm seeing some ranging price action, push up, and then some more ranging price action. So yeah, it kind of does not look like a very clean V reversal. So not on the watch list, being more patient, looking for the break of the most recent high or the most recent low. So to recap, in a trade on the Euro US dollar, in a trade on the Aussie US dollar as well, 2 liquidity sweeps. Let's see what will happen. Currently, we are approaching spread hours, so I will be closely monitoring my stop losses. Again, spread hours are from 9 to 11 p.m. London time. Be very careful because during that time, the spreads widen drastically. You could easily get taken out of a position. So make sure you have a buffer of at least 20 to 30 pips from your entry level, or from your stop loss, sorry. So your stop loss needs to be 20 or 30 pips away from the current price right before spread hours. That is my best advice. If you have it set like that, at least 20 to 30 pips from the current price right before spread hours, well, then you most likely will not get taken out when the spreads widen, because they widen by like 10, by like 5, 10, or maybe even 15 pips sometimes, depending on the currency pair, okay? So that will be about it. Yes, markets are more corrective. We are getting some moves, as you can see, but they could not be sustained. we are not seeing trends, we are seeing more corrective range-bound price actions. So this is where the liquidity sweep entry shines, and this is where we look for those range-bound opportunities. So let's see how the liquidity sweeps play out, and I will see you guys in the next video.